Welcome subscribers and everybody back to The Contrarian. I have a very different video today in that I actually do agree with Cathie Wood on something major that she has just said. And this is only a partial agreement, by the way. I don't think that we are not in a bubble at all, but her statement recently about investor confidence and investor sentiment not being reminiscent of an actual bubble top is very correct in my opinion. So I actually do agree with Cathie Wood, as insane as that might sound. And I thought that this might never happen because I do disagree with her on a lot of her stances with regards to so-called innovative companies that she buys into a lot. But that being said, I do think that she's correct on this statement that she has just made. So I'll just take us through the article right now and just look into her statements that she's made. Okay, everybody, so we're looking at this article right now. It just came out yesterday. ARKK's Cathie Wood says stock market couldn't be further away from a bubble. Here's why. Wood says she is emboldened by bad news. Now that sounds like a very contrarian stance to take. So right away that I do agree with that. There's a growing sense of unease emanating from equity markets in recent trade. Despite and perhaps because of the Dow Industrial Average and the S&P 500 index trading near record heights. However, star investor Cathie Wood, who runs a suite of popular ETFs in investment management, says there's no reason to fear that the market is becoming too bubblicious. As the ARKK founder put it, I don't think we are in a bubble, which is what I think many bears think we are, during a Thursday interview with CNBC near midday. Her comments coming amid intensifying worries about a possible shutdown in economic growth as the Delta variant of COVID-19 gathers momentum, creating headwinds for fuller recovery from the pandemic that has gripped the globe for well over a year. Investors also have been wringing their hands over the prospects of the Federal Reserve scaling back easy money policies, notably the monthly purchases of $120 billion in treasuries and mortgage-backed securities as anxieties grow. Wood's investment funds, highlighted by the flagship ARKK Innovation, have been one area that has been cited as possibly overvalued and vulnerable to a dramatic swing lower if the market starts to deflate considerably from its current levels. Michael Burry, by the way, is short ARKK's innovation ETF, so he disagrees with Cathie Wood apparently. ARKK Innovation ETF is down 3.8% so far this week and has lost 7.3% in the year to date, badly underperforming the broader market and coming after the fund rang up a one-year return of 149%. So it really rallied a lot last year, as you can see. By comparison, the Dow Jones Industrial Average is down 1.6% this week, but up 14.2% this year, while the technology-laden Nasdaq is off 1.5% on the week, but has risen over 13% so far in 2021. And the broad market S&P 500 is off 1.2% in the week to date, but boasts a nearly 18% gain for 2021. Wood's view on the market, however, is that investors are acting more sedately and prudently compared with the euphoria that was characteristic in the late 1990s and early 2000s dot-com boom. In a bubble, and I remember the late 90s, our strategies would have been cheered on, she told the Business Network. You remember the leapfrogging of analysts making estimates one higher than the other, price targets one higher than the other, she said on Tech Check. She also noted that negative sentiment in the market as a contraindication, suggesting that growing pessimism may actually fuel further gains rather than inflating a bubble. I like bad news, she said. When I see such negative sentiment out there, especially when it comes to valuation and longer time horizons, investment time horizons, I actually feel a little more comfortable, Wood said. So the main takeaway from this that I do agree with is that we are not likely, obviously. I don't know the future. I'm not some soothsayer. I don't have a magic crystal ball out there. But it just doesn't seem that we're at a market top yet, simply because for that to be necessary, we would need to see investors being overly confident and overly exuberant, and we just do not see that right now. In fact, we see the exact opposite. Investors are very nervous, they're very scared, they're always looking for a top. They've been calling for a top for the last 6 months, if not before then. So you have people out there like Harry Dent who are, they've just been always saying that there's a top, but the last 6 months especially, they've been especially just nervous and saying that there's always been a market top. And I just don't see that as being the case, because if you look back at past historical bubbles, and this is definitely a historical bubble that we are in, don't get me wrong, and it will crash at some point in the future, but I just don't think we're at the top, because if you look at all of these past historical bubbles, whether it be the late 1990s bubble that Cathie Wood was just talking about, in which investors were extremely exuberant and confident and just bidding up the prices of these emerging tech companies surrounding the internet and .com era, to extreme overvaluations. Or you look at the Japan bubble in 1989, just about 10 years prior to that, where Japanese companies were seen as the next emerging market slash market that was expected to grow exponentially from there, and then that really crumbled and fell. Or if you look at the 1929 bubble that preceded the Great Depression here in the United States, in all of those cases, you had just extreme investor confidence that this would keep going on, that there was some sort of a new paradigm in place, that somehow that the economic system and terms of valuation, the fundamentals on which companies should be valued, somehow that these had changed, and therefore that the current valuations were justified. And we just do not see that yet in the market out there. We see a lot of investors, whether they be institutional and also on the retail side of investing, calling for tops in the markets, calling for a Fed tightening or a tapering of asset purchases by the Fed, or just saying that it'll crash under its own weight. And I just simply do not see that happening yet, because simply put, in order for that to happen, you would have to have investors being pretty much entirely on board with where the market was, and therefore they would have very little money on the sidelines with which to buy as it began crashing. It's just really not possible in normal market conditions anyway for the market to crash with investors having so much excess cash on the sidelines. It just really isn't, there's no precedent for it anyway. Obviously with a black swan type of event, that could happen. That's kind of what COVID was. It was kind of a mixture of investor exuberance as well. But I really do agree with Cathie Wood on this. I don't think that we're at the market top just yet. However, I do disagree with her in the statement that we're not in a bubble at all. I do obviously think that we are in a bubble. If anything, it could go down as the most overvalued metrics that we end up getting to at the peak of the bubble. If stock prices continue to rally, which I think is very likely, obviously you could get investor sentiment shifting to being extremely optimistic. You could, in theory, get there without stock prices rallying an extreme amount. They might rally 10 or 20% from here, but that is still a significant rally nonetheless. So I do agree with Cathie Wood on that one aspect of investor confidence not being there yet, but I do disagree with her overall in that I do think we are in a bubble that will go down in history as probably the biggest bubble, just in terms of what it encompasses. It encompasses basically everything at this point. So all of that being said, I'm not trying to provide any sort of financial advice here. I'm not saying that this will 100% continue to rally from here in the markets. I'm just saying that in my opinion, investor confidence points to the markets not being at a top yet. So I do agree with Cathie Wood in that aspect. And all of that being said, if you guys want to hear more about what I talk about on this channel, which is going against the crowd in order to outperform the markets, which is kind of counterintuitive to most people, but if you do want to outperform the markets with investing, or just with anything in life really, you have to look where other people are not looking. It's just that is what the majority of the most successful investors out there are doing, and it's just not commonly seen. So that is what I talk about on this channel. If you want to hear more, just consider subscribing, and I hope to see you again at some point.